The markets have now closed here in Korea, and they'll open in a few hours in the U.S. to start the week. So it's time for a look ahead on this Monday with Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute, who joins us on the line. Thanks for coming on, Dr. Hwang.
Thanks for having me today.
Well, let's start with the surprise GDP numbers from the U.S. First quarter growth beating expectations at 3.2%, sending the S&P and the Nasdaq to new record highs. Are we in for another week of gains?
Surprisingly strong U.S. first quarter economic growth boosted the U.S. stock markets to the record highs. In line with the strong GDP growth, the first quarter earnings results, which were better than market expectations so far, are driving stock markets index up even further. The Dow Jones Industrial Average rose 0.31% and the Nasdaq Composite added 0.34% as of close on Friday. The S&P 500 gained 0.47% to 2939, its second record closing high for the week. Gains in the global stock markets are more likely to be kept by caution over less upbeat aspects in the GDP report, which points out some weakening ahead. The strong GDP data helped to ease fears of an imminent recession. However, investors need to be aware that the recent gaining was driven by a smaller trade deficit and a large accumulation of unsold merchandise as consumer and business spending slowed sharply.
Well, Korean stocks have been a different story entirely. There's been a plunge in earnings at major companies coupled with rising oil prices. How are things looking here domestically?
South Korean shares edged up on Monday as foreigners bought local stocks ahead of the Federal Reserve's monetary policy decision this week. The benchmark KOSPI rose 1.70%, while the KOSDAQ added 1.30%. Seoul market ended Monday on a high note, following data showing U.S. GDP grew at a faster 3.2% annualized rate in the first quarter. However, worse than expected on average earnings results along with rising crude oil price may well limit the stock market rally based on the fragile economic fundamentals. Tech and auto stocks led gains, with market bellwether Samsung Electronics rising 2.9%. Number 2 chip maker SK Hynix gaining 1.78%, and top car maker Hyundai Motor Company climbing 2.58%. Leading steelmaker POSCO gained 0.98%. Among losers, national flag carrier Korean Airlines declined 0.45%, and Asiana Airlines shed 5.05%.
Got it. Well, you mentioned the Fed Open Market Committee meeting this week. Also, earnings due from Apple and Google. What should we be watching there and elsewhere?
Investors are awaiting a meeting of the U.S. Federal Reserve, earnings reports, and Chinese factory data for further clues on the stock market movement. The Fed meets Tuesday and Wednesday in a week heavy with earnings news and some key economic reports. Federal Reserve Chairman Jerome Powell is expected to emphasize the Fed will continue to be patient and hold back from raising interest rates. The March reading for core personal consumption expenditures, the Fed's favored inflation measure, is due later on Monday. There are more than 150 S&P 500 companies reporting earnings this week, including Apple, Alphabet, and drug majors Merck and Pfizer. Markets will also be looking to global factory activity surveys this week, particularly official and private readings on Chinese manufacturing, which will both be released on Tuesday.
All right, and we'll be watching all of those, but that's where we'll have to leave it here today. Dr. Hwang, thanks as always for your time this afternoon.
Thank you very much.